Welcome, everybody. This is the Options Moneymaker Q&A session for December 16th, 2020. I'm Mark Dannenberg, and this is our last Q&A session for the 2020 calendar year. We'll pick up again in January, but we hope to have a very productive session here. Michael Kastner and Aaron Rumley are with me this evening also, and we'll be hearing their voices in a little bit. First, we're going to just make sure everybody understands clearly why we do this. All of you who are attending have made some level of commitment to really learn how to trade, and we are here to help you do just that. Our mantra is learn to trade and then trade to earn. A lot of people will jump into trading and they'll fail immediately and they think it doesn't work and it wasn't for me, and they make up all sorts of stories about that. And the reason is because they didn't invest any time in learning. So we're here to help you learn. And one of the ways that we help you learn is by spending our time every other Wednesday, making ourselves available so that you can ask us questions about any topic related to what we do, the systems that we use, the strategies that we use, whether it's options trading or futures trading. So if you have questions about the adaptive entry system, if you have questions about the profit sweet spot matrix that Aaron talks about every day, looking at the daily crosses when the market opens. If you have questions about how we construct the live trading room, anything that perhaps we haven't had time to respond to in the live trading room, or if you have questions about our Profit Builder Plus options education program or anything options related or anything futures related, we're here to answer those questions. We also represent New Cycle Trading and Analytics regarding the adaptive entry system and the tools that they've created, which has really magnified the level and consistency of profits that traders are earning in our community. So we're pretty excited. We're pretty excited to be working with them and collaborating with them. All right, so first thing we're going to do here is emphasize how important it is to update your personal trading plan at the end of each day. Now, if you're not familiar with the personal trading plan, it is a tool that we created here at Options Moneymaker to help traders understand where they're at any given point in time. And Aaron and I were having a conversation today about how important the personal trading plan is because it helps you keep track of what your performance is. If you only function as a trader day to day, meaning you don't keep your eye on what your average profitable or losing run rate is, you don't keep your eye on what that run rate could project going forward, then you're kind of stuck in this quagmire of some days you feel really good, other days you feel like this isn't for you because you have no relationship, no perspective at all in terms of how today performed relative to prior history or perhaps carrying that history forward. So what we're going to do here is what we do frequently at the end of each trading day is we're going to translate our performance for the last couple of days into our personal trading plan, and the personal trading plan then helps us take our average run rate and project that forward for a 12-month period. We're almost at 6 months. We're closing in on the first 6 months of tracking in our personal trading plan. So we really have some significant data in there now and really are at a point where we can rely pretty strongly on the averages that we've established. And I'll talk a little bit more about that when we get to the personal trading plan. First of all, here's the detail of today's performance. Aaron does a great job of just tracking detail trade by trade. These are live trades. We've got winning trades, we've got losing trades, and I'm showing this because we have several people who like to take a snapshot of the 7 to end of the day detail, and you can kind of match up to what your own personal performance was. But we've got trades that we lose on, we've got trades that we have a full loss on. Here were 2 back-to-back 20-point losing trades. And then we've got a whole series of 5-point winning trades, we've got 10-point winning trades, and it's just whatever the market offers us that we lock in. Yesterday, here's the detail from yesterday, starting at 7 a.m. We actually track from 3 a.m. forward, but most people pay attention to 7 a.m. forward. So here's from 7 a.m. First trade was 7:01, and you can see 5-point wins, 10-point wins, 6-point loss. We just record them as they come. We're really, as much as possible, kind of non-emotional about the whole thing. And then at the end of the day, we just see what the tally is. So that's the detail for those of you who like to take a snapshot of that. Mostly I focus on the daily summary, which is going to summarize for us how we did in the two primary categories that we track for our personal trading plan. So the first category, you're familiar with this if you've been here with us for a while, but we track from 9:30 a.m. Eastern to 12 noon Eastern. And that's for the benefit of people who want to see what they could produce by trading perhaps half of a day. And then we also track from 7 a.m. Eastern to 4 p.m. Eastern. And that's for people who are willing to spend more time in their day trading and perhaps have a bigger overall performance. Now, there's a lot of different variations to how you can track. 9:30 to noon, we take a look at tracking all signals, all of the adaptive entry system signals. 7 a.m. Eastern to 4 p.m., we take a look at tracking only the trend bias and trend continuation trades. But you can track all signals 7 to 4, you could track all signals 7 to 4 plus fractals. There's all sorts of different ways you can slice it. So we're not implying that these two categories are the only categories you should be trading, but we have used those since July to just demonstrate for you the power of tracking on a personal trading plan so that you can keep track of what your performance is. So yesterday in the 9:30 to noon category, we managed to earn 19.75 points. Now this is trading the NASDAQ 100 futures, and each point is worth $20 per contract. So if you're trading one contract, it's going to be $20 times that 19.75. And we did 11 trades, and we are actually trading 3 contracts per trade, so that's 33 contracts. Now today we did 55 points and we did 11 trades, so way more productive today, and you're going to have various variations like that, but way more productive today, 33 contracts on 11 trades and 55 points. So that's going to be 55 points times 20 times 3 contracts. And I'll give you the totals on that when we jump over to the personal trading plan. In the 7 to 4 category, where we're only taking the trend bias signals, yesterday was a really strong day at 64.75 points, 14 trades, 3 contracts per trade, and today was 35 points, 16 trades, 3 contracts per trade. Now, before I get off of the summary here, I want to just point out a couple of things. Now that we have 6 months, almost 6 months, we're 2 weeks shy of 6 months under our belt, we really can start to take a look at our averages with much greater degree of integrity. And the thing I wanted to emphasize, and this is what I was alluding to earlier, it's difficult when you go through a couple of big losing days or maybe a series of days. A couple of weeks ago, we had 3 losing days in a row, and that starts to weigh on a trader. And if you had no perspective, big picture perspective, you might start to wonder, well, does this strategy work? And what am I doing wrong? And this is really discouraging. That is just 3 days out of a whole 52-week focus. 52 weeks is what we're looking for, and that's just 3 days. Here is a day last week that just really was very frustrating for all of us, down 85 points, 9:30 to noon. Now that's a big loss. In fact, that's the biggest losing day we've had. And if I scroll back up here, which I did today, just to identify what's our biggest winning day in this 6-month time frame was 110 points. Now, I would never expect us to average 110 points a day in the 9:30 to noon category, but there is a day that we did that. I also would never expect us to average 85 points of loss every day in the 9:30 to noon category. So what we're seeing here is by measuring on an everyday basis, keeping track of the trade detail, like I already showed you, we are able to establish some boundaries, some parameters within which we tend to average a certain performance value. And if you trade for 52 weeks and you're trading right along with us, it's a reasonable expectation that you could be fairly close to our average. Of course, same thing applies to the 7 to 4 category, where we're only trading the trend bias and trend continuation signals. We've had 73-point losing days. We've had whole periods of time, a couple of weeks at a time, where we haven't had a single losing day. So that's why we emphasize so strongly that it's important to focus on the averages and not the individual day. If you focus on the individual day, you're just subjecting yourself to the emotional roller coaster of, oh my God, that was a horrible day. Oh my God, this is awesome. This is going to be this way forever. None of that's going to be true. And so we focus on the averages. All right, so I'm going to jump over to our personal trading plan, and I'm going to start with a 9:30 to noon category. And this is a tool that was designed specifically so that on a daily basis, you could invest just a couple of minutes of time at the end of your day, and you can plug in your actual performance. What was your performance for that day? And it's going to calculate for you what your average run rate is, meaning if you took all of the wins and losses and you netted them together, you kind of have a understanding of how you're performing overall. And then if we take that average and we project it out forward so that we cover a full 52-week period, you have a reasonable expectation of what your income could be over a 12-month period. All right, so let's first of all start by putting in our performance for yesterday. We're going to go over here and we're going to plug in the, let's see, 19 3/4 points at $20 a point times 3 contracts was $1,185. And we did 33 contracts, that's 11 trades with 3 contracts per trade. Today was 55 points at $20 a point times 3 contracts. So today was not 33, it was $3,300 of profit. And today was the same number of contracts. Now we're going to lock in our contract override field 3 contracts, because that's the number of contracts that we traded yesterday and today. And before I go through the projection for the 12-month period, I'm going to come back over here and I'm going to do our 7 to 4 data entry. So we had 64 3/4 points at $20 a point, 3 contracts. That means that yesterday our profit was $3,885. $3,885. We did 14 trades at 3 contracts per trade, 42 contracts. And then today it was 35 points of profit, $20 a point, 3 contracts, $2,100 of profit today, and 16 trades, 3 contracts per trade, 48 contracts in total. By putting in the number of contracts, we are factoring into our forecast our expense, our cost of doing business in terms of our trades. All right, so now I'm going to jump up to the top of the spreadsheet here, and we're going to take a look at this value. Right here, it's telling us that we have 23.6 weeks behind us. So we have been trading and recording for 23.6 weeks. 33 of those days, 33 days in the last 23.6 weeks have been losing days. They've been losing days, 33 days. Now, the reason we look at that value is by default, all the other days are winning days. And then these two values right here, this is the average of our winning days, and this is the average of our losing days. So take all of our winning days, and we can determine that our average winning day was 31.71. Now what we do is we actually factor in the frequency rate of winning days into this value. And here we factor in the frequency rate of losing days into this value. So it's not just a pure, you lost, 33 days and it's those 33 days performance divided by 33. It's those 33 days, and we're factoring in so that we go forward the frequency of winning days to losing days so that we factor that appropriately into our forecast. So 31.71 is our average winning day. These two values right here are where we need to consider our future forecast. We know that we've averaged 31.71 on our winning days, so we want to use that for our future forecast because that's the run rate that we have actually established. So 31.71 is our average run rate for our winning days, and 32, sorry, minus 32.2 is our average run rate for losing days. And so now what we've done is we've said to our tool here, our personal trading plan tool, we want to assume that going forward, we're going to have the same averages that we've already established for the first 24 weeks, almost 24 weeks. And that's what those numbers are based on. So now we know what our actual history is, and we are using that same history to project going forward. We're also assuming that we're not going to continue to scale up the number of contracts that we're trading, that we're only trading 3 contracts for the rest of our 52-week plan. So that's relatively conservative in my opinion. So all of that factored in, what our history shows, plus using that same history projected forward for the rest of our 52-week time frame, says that at the end of 12 months, we could reasonably have an expectation of having earned about $288,000 for that 12-month time frame. Now, there's absolutely no guarantee that we're going to earn $288,000, but the longer we go in establishing our actual history within our personal trading plan, the closer we are going to be to that actual number. The reason there might be a variable to this number, higher or lower, is our actual performance going forward might decrease, or our actual performance going forward might increase. So we might have a positive variance or we might have a negative variance. The longer we get into our 52-week plan, the less of an impact each day's performance has on the overall run rate. So 288,000 is a reasonable run rate right now, reasonable actual projection for a 52-week plan, having started the first week of July. Now that's having started with $5,000 in the account, and all we're doing is we're recycling the same capital from trade to trade to trade. We're never in more than one trade at a time. We are certainly never holding anything overnight. This is all trading during the day, and we're into a trade and we're out of the trade just as soon as we possibly can get out of the trade, following the parameters that we use. All right, so let's jump over to our 9:30 to noon category. The numbers are going to be a little different here because we although we have the same 23.6 weeks, almost 24 weeks, we are trading a shorter time frame. We're trading 9:30 to noon, not 7 to 4. We have 38 losing days out of our 23.6 weeks, and our average winning day is 23.57. Our average losing day is 38.82. So we want to now forecast forward using those same run rate values, minus 38.82, and we are capped at 3 contracts. I'm going to come back and talk about the number of contracts here in just a minute. And that tells us that trading 9:30 to noon, using our historical run rates projected forward, I think I put that in wrong, 23.57. There we go. Well, I got that wrong too. 23. Well, I seriously have not been drinking here. 23.57. I'm going to blame that on the keyboard. There we go. So 23.57, that is the run rate. That's the run rate that we've established, and our losing run rate is 38.82, all factoring in the frequency of losses relative to the number of weeks that we have under our belt. So $166,302 is the 12-month forecast. Now, if you're just starting out and say maybe you're in the first 2, 3, 4 weeks, your averages may change more dramatically from day to day. That's just part of the process. You've got to build your averages. You've got to build some experience under your belt. You've got to understand what you're doing. And this is one of the reasons why we strongly suggest that you trade the first month, maybe as much as 3 months in sim mode, and you can establish your own confidence level in the strategies, as well as establish your own average run rates. And that way, when you shift to live dollars, you can take what your experience rate was from sim mode and use those averages to help forecast going forward. And again, the longer we go, we're almost to the 6-month mark, the less likely it is that these run rate values are going to change dramatically. They could change. They could either improve or they could erode. Whatever they are, we're going to use those values going forward. And again, this is all based on having started with $5,000 in the account. We have a projection of about $166,000 a year. At the end of 12 months, we'll know exactly what it is. And then starting year 2, you have a very, very strong run rate foundation to build your forecast off of. Now, if you decide that going from $5,000 at the beginning of your 12-month time frame to $166,000 over a 12-month period is not sufficient, you can adjust the number of contracts. Now, let me just quickly tell you the number of contracts is limited by 2 things. Number 1, this value right here, we will never allow our number of contracts to be such that the margin requirement for the contracts is more than 10% of the value of the account. So we have to have at least 10% of the value of the account in order to cover the number of contracts, the margin on the number of contracts that we want to trade. The second thing that limits it is your choice, your own personal bias for risk appetite or risk suppression. We've decided to leave ours going forward at 3 contracts, but you can certainly change to whatever you are comfortable with. If you are confident in your run rate, you understand how you got there, you're not completely wigged out if you have a losing day, or like we had a 87-point losing day last Friday. You're not bothered by all that more than reasonably. Then you could decide to increase the number of contracts. And let's say you decided that you would graduate from 3 contracts to 5 contracts. You still will not see the personal trading plan tool increment contracts unless there is sufficient capital in the account so that the margin requirement on the 5 contracts is no more than 10% of the value of the account. But had you increased from 3 to 5, then your projection, the history doesn't change, but the projection going forward, you can see it changed from 3 contracts to 5, and all of a sudden, instead of your 12-month forecast being 166,000, now your 12-month forecast is 230,000. 5 contracts is a very reasonable amount to trade for anybody who's confident in what they're doing, has some experience under your belt, and doesn't feel like you're holding your breath through each trade. You just are trusting the process and trusting the system, and you understand what's happening. You want to get a little more crazy, 10 contracts. There's no limit to what you can decide to do here. I would tell you to proceed cautiously, proceed wisely, and part of your wisdom of making this decision and maximum number of contracts must absolutely be based on your personal confidence level in what you're doing. And you can look at these values of your average wins and your average losses and understand clearly why you're there, how you got there, and it's pretty much in line with what you see Erin trading every day in the live trading room. She tracks these 2 categories specifically. So I'm going to leave ours at 3 contracts. By the way, you could lower it too if you decided to. You could lower it to 2 contracts for the rest of the 12 months, and your projection's about 134,000. So that's a really strong value, in my opinion, to go from 5,000 to 166,000, or to go from 5,000 to 288,000. And we will definitely see what that is in about another 6 months. But from between now and then, we're going to continue to track the performance detail, which Erin does a great job of tracking this every single day. All the detail of the trades, the strategy that was traded, whether it was long or short. Everything that we're doing right now is on a 5-minute chart, but if that ever changes, we would indicate on this tracking, whether it was a 3-minute or a 10-minute or a 30-minute, whatever time frame we're trading, the time of the trade and what the profit or loss was on the trade. Last thing I just want to show you here real quickly is the averages. Now this is a really incredible tool that Aaron built into the spreadsheet. Um, we can look at the two categories that I just talked about that are highlighted in green here. Um, the all signals 9:30 to noon, all in for the last 130 trading days, we're averaging $332.92 a day. There have been 34 losing days, negative days during that period of time. In the same 130 trading days, the 7 to 4 category, trading only the trend bias and continuation signals, is averaging $535.88 a day. There have been 27 losing days during that time period. Two of the most productive categories there are all signals 7 to 4. That's averaging $1,038 a day at 23 negative days. And then if you took a look at all signals, including fractals, because the numbers I just shared with you do not include fractals, but Aaron and Michael do a great job of identifying fractals during the day too. A lot of people in our community trade fractals, but we're not counting those in our data that we are translating into the personal trading plan. But if you wanted to see what the performance would be, because we have all of the detail by strategy, 7 to 4, all signals from the adaptive entry system, including fractals, is averaging about $1,363 a day, and there have been 18 losing days. That by far is the best performing category that we have. But not everybody wants to trade from 7 to 4. Not everyone wants to be as busy as you might need to be to trade all of the adaptive entry system signals, including fractals during that period of time. But what we do is we share the data with you and tell you what that particular category can do in terms of performance. One of the coolest features, and I'm going to put this out there because there might be some questions about it this evening. One of the coolest features that Aaron built into the spreadsheet is the ability for us to select a category. Select any category we want. It could be trend bias only. It could be cycle finder. No, sorry. It could be continuation trades only. It could be any combination of signals that we have in the adaptive entry system, and then we can pick any time frame. So if somebody wanted to say, well, I wouldn't mind trading all signals plus fractals, but I only want to trade from like 9 to 11, we can put 9 in the starting time, we can put 11 in the finish time, and we're going to be able to tell you in 130 trading days what the daily average has been that we've seen historically, and what the negative days are, what the average number of trades are, and what the win-loss ratio is for that particular zone. So it's really valuable for somebody who's coming in new and is thinking that they only have a limited amount of time to trade. They give us the parameters of when they want to trade and what they're willing to trade in terms of signals, and we can help you understand what to expect reasonably. Now, that's all based on history. There's no guarantee going forward that that history is going to repeat itself, but we track all this data, and then of course we as I showed you in the personal trading plan, we plug actual performance in every single day so that we have a reasonable projection of what our income could be over the course of 12 months.